In this session, we will be talking about the common size statement. In the previous sessions, we had been discussing about comparative statement. We saw that comparative statement is used for comparison. Now let's get on with our discussion regarding common size statement. Now, common size statement is another form of analysis and interpretation of financial statements. When we look at companies, you may see companies which are very diverse and which are operating at different scales. So sometimes it becomes very difficult for us to compare some companies. So, for example, if you look at a company like if you look at an IT company like IBM, IBM on an average employs around 4.5 lakh employees. It is the sixth largest company in the world. And if you compare that company with an IT company like, let's say, Zoho, which is also into the IT space, but which operates at a relatively lower scale. So how to compare these two companies? They are companies which are at the same domain, but they're operating at two different levels. If they are operating at two different scales. Or if you pick up a company like, let's say, Reliance Retail. Reliance Retail is one of the largest retail companies in India as of now, but you want to compare Reliance Retail with, let's say, a neighborhood grocery store. And the scale is absolutely impossible. Reliance Retail may be employing some lakh employees, whereas your neighborhood grocery store person may be having maximum of maybe 1 or 2 employees. But you want to do a comparison because they are in the same segment. So for that, you need some kind of a statement which will facilitate that help, which will help you in terms of carrying out that kind of an analysis. So for that, you would be needing the help of what is called as the common size statement. Now, common size statement, it takes into consideration by bringing the companies that you're comparing onto a common line or onto a common base. So the basis for a comparison in the case of common size statement would be trying to bring both of them to a common platform. That is what is meant by common size statement. So common size statement will help you to compare your companies by bringing them to a common platform. Now, in common size statement, what happens is all the items that you would like to consider, all the items that you would like to evaluate, it is taken as a percentage. Okay, it is expressed as a percentage. So you're bringing it down to a common basis for you to carry out your evaluation. So that's what happens in the case of a common size statement. Common size statement can be of two types. You have common size balance sheet, and then you have common size income statement. So what I've just shared with you is common size statement. Common size statement helps you in comparison. It helps you to compare companies which are of different sizes, which are of different scales, and by bringing them down to a common percentage, you would be able to carry out the comparison. So that is about the common size statement. So common size statement is of two types. You have common size in balance sheet, and then you have common size income statement. Talking about common size balance sheet, all the balance sheet items that you see here, it is expressed as a percentage of the asset or the liability. Each asset or each liability item that you would see in the firm or you would come across in the balance sheet, it is expressed as a percentage of the total asset or the total liability. Now, what is the purpose? What is the rationale behind this? The rationale behind this is because it will facilitate you or it will help you to compare the companies which are of different sizes, okay, which are of different scale. So I just gave you the example of Reliance Retail with your neighborhood grocery store. So in order to bring them both to a common scale, preparing the common size balance sheet, it will help you. Now we will be looking at the format of the common size balance sheet. So here what happens is common size balance sheet is usually used for comparing two different companies. Okay, it is used for comparing two different companies of two different sizes. And then what happens over here is each of the assets or each of the liabilities, it is expressed as a percentage of the total asset or total liability. So for example, here we have the asset for company ABC and company XYZ. So asset one, which it could be any one of the assets, you would take that as a total percentage of you're calculating that as the percentage of the total assets which belongs to the company. So that is how you go about with the common size balance sheet. Similarly, you will do this for liabilities as well. So when you prepare the values of both these companies on common lies in terms of percentage, it helps you to carry out a proper evaluation. It helps you to carry out a proper study. So this is the advantage of common size balance sheet.